purpose of this video is to illustrate how to trade overbought and oversold conditions intraday. This is a chart of the ES4 Renko, and as you can see, it's clearly in a downtrend here. Now, traders often complain that by the time they get into a trend, it's almost over, so they miss out on a lot of the profits. Now, theoretically, if you were able to get into this trend right here at the peak, and you got out right here at the low point of the trend, you'd make 29 points on this trade down through here. However, if you traded the overbought and oversold swings of this trend, you'd make 92 points theoretically if you could hit each low and each high of these swings. Now, you can come pretty close to hitting each low and each high of a swing, and I'll illustrate for you what I mean. Now, here's the same chart of this downtrend, and I've added an indicator here that I like to use that's helpful in determining overbought and oversold conditions. However, the problem is that in this downtrend, the overbought and oversold lines are shifted. Ordinarily, they're equidistant from the zero line, but you can see overbought is much closer to the zero line here on this downtrend, and the oversold is farther away, simply because in the downtrend it doesn't become oversold. It becomes overbought when it goes against the trend, but doesn't become oversold. So the question is, how do you determine the oversold swings here? You can't use this indicator to do it efficiently. So you can see here how each peak here coincides with coming, either hitting or coming extremely close to the overbought line here and here and here and here. This little up move here doesn't really register, so it's not something you would bother with. You would just go from the overbought here down to the oversold here. But in any event, you need something else to fill in this gap between the lows of the indicator and the actual oversold line and the actual swing lows in here. So I use a free indicator for that purpose, and I'll show you that in a second. Now, this is the same chart of the ES. I've added two more indicators. This indicator here is the cycle indicator, and it's illustrated in a previous video I've made referring to cycles and trends. Now, here I've added the polynomial indicator right here. It's a linear regression indicator. Now, the problem with linear regression is the market does not move in a linear fashion. So the polynomial version of linear regression takes care of this. Now, I know as soon as I mention polynomial, you're going to say, yes, but it repaints. That's true. It's the poster child of repainting. It repaints like crazy. However, using it in real time before it significantly repaints, I found that it's still quite useful to use. Now, this is the only indicator I've ever used that repaints. I don't like indicators that repaint. I think they're useless. However, this indicator is not completely useless when you use it intraday. In any event, you can see up here it shows the downtrend, and the swing high comes up to the upper border of polynomial, then the swing low comes down to the lower border, and so on. And you can see how it's oscillating between the upper and lower borders of the polynomial in through here. So you combine that with a cycle indicator, and so as you can see, it cycles up, cycles up, cycles up, and then cycles down, cycles down, cycles down at each swing. So between the cycle and the polynomial indicator, you can get a very good idea of trading the swing highs and swing lows, the overbought and the oversold of any equity you'd like. This indicator is free. It's called the PRC2. You can Google that and you can get yourself a copy of it if you'd like.